Michael Burry secretly broke after Tesla disaster. Elon Musk responds. Michael Burry, known for betting against the U.S. housing market and featuring in The Big Short, has decided to back out of his put option bet against Tesla. While many have tried to bet against Elon Musk, few have succeeded. But has Michael Burry got out with a profit? Today we're going to talk all about Michael Burry backing off from his Tesla short. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Michael Burry has an insane track record, predicting the dot-com internet bubble in the financial crisis of 2008. However, his $2 billion fund made a short bet against Tesla, which went utterly wrong. Scion Asset Management purchased hundreds of thousands of put options against Tesla, shorting Elon Musk's company. In the past, Elon Musk has hated short sellers for targeting Tesla and affecting their cost of capital. But now Michael Burry appears to be late to the party. He also took a short position against Cathie Wood of ARK Invest, who shot back telling him he knew nothing of the innovation space. After Cathie's stark warning, Michael Burry found himself needed to cover his short bet against Tesla. Investor Michael Burry of The Big Short fame said he was no longer betting against Tesla Inc. and that his position was just a trade, CNBC reported on Friday. Burry's Scion Asset Management said in a regulatory filing in mid-May it had put options on 800,100 Tesla shares as of the end of the first quarter. Details on the strike price of the puts, their value, and whether they were part of a broader trade were not available. Based on Tesla's closing price of $667.93 at the end of the first quarter, the value of that many shares would have been about $534 million. The actual value of the options position was not known. Put options give investors the right to sell shares at a certain price in the future. Options analysts said at the time that it was possible the puts disclosed in the filing might be part of a larger trade that would curb losses if the put position went against the fund. No, it was a trade, Burry was quoted as saying in an email to CNBC on Friday, when asked whether he was still shorting Tesla. Media really inflated the value of these things. I was never short tens or hundreds of millions of any of these things through options, as was reported. The options bets were extremely asymmetric, and the media was off by orders of magnitude, Burry told CNBC. One of the investors profiled in the book, The Big Short, and the film of the same name for betting more than $1 billion against the U.S. housing bubble, Burry has previously been skeptical of Tesla's sky-high valuations. Tesla Inc. fell nearly 12% on Tuesday in its worst two-day performance since March, after insider reported Michael Burry of The Big Short fame said in a tweet that Elon Musk may want to sell some shares to cover his personal debts. The stock's decline added to Monday's 4.8% slide after a majority of voters in a Twitter poll set up by Musk said he should sell 10% of his stake in the electric vehicle company. Burry didn't immediately respond to a message from Bloomberg News to confirm the reports on the tweet, which currently doesn't appear on his Twitter feed. Separately, Musk's brother Kimball disclosed in a filing that he sold 88,500 shares of Tesla on November 5th. Tesla is still up 54% this year, even with the recent decline, and has held above $1 trillion in market value, a key level it hit in late October. Matthew Malley, chief market strategist at Miller Tabak & Co., said the sell-off in Tesla's shares was part of a normal and healthy pullback. He called it a reaction to a very overbought condition. CEO Elon Musk has often warned people not to bet against Tesla on the stock market. He went as far as predicting a next-level short burn of the century, and it sort of happened last year. Tesla's stock went on a massive run, and people shorting the stock have cumulatively lost tens of billions of dollars. Over the years, Tesla has been the target of some high-profile short sellers, like Jim Chanos, who made his name on shorting Enron, and David Einhorn, who made his name shorting Lehman Brothers before its 2008 collapse. They've lost millions on their bets against Tesla, but until recently, they seem to be holding on. Now it appears to have changed, as the short interest on Tesla stock has crumbled to an all-time low. Bloomberg reports the percentage of stock borrowed by traders, a standard measure of short interest, has slumped to 1.1% of Tesla's shares available for trading, according to IHS Markit Ltd. As of last Thursday. That's the lowest since 2010, when the carmaker went public. This means that the amount of money being bet against Tesla, relative to the value of the company, is at an all-time low. It's a massive change since up to 20% of Tesla's entire float was shorted at some point last year, when it was the most shorted stock on the market, but the short percentage steadily fell over the last 12 months. The latest drop happens as Tesla has managed to consistently increase deliveries every quarter this year and just reported its delivery numbers for Q3 2021 on Saturday, confirming a new delivery record of 241,300 electric vehicles. Electrek's take. This is an interesting change. The fight between Tesla investors and shorts has been a big part of the company's story, but investors have been winning most of the battles. Now, have they won the war? It looks like it for now, but of course the shorts could always come back for another round. It's also worth noting that Tesla investors have benefited from the shorts as a result of short squeezes, when the stock went up and the short fees with them. With the number of shares being shorted right now, Tesla investors can't count on a short squeeze anymore. Michael Burry suggested Tesla stock could plummet 90% in a now-deleted tweet on Tuesday. The investor of the Big Short fame drew a parallel to Amazon shares plunging when the dot-com bubble burst, and only soaring years later when the e-commerce giant transformed its business. Can Tesla fall 80 or 90%? After 2000, many high flyers did. Amazon fell 95% 2 decades ago, changed its whole business, and thrived much later, Burry tweeted. The Scion Asset Management boss noted Elon Musk himself said Tesla was overvalued last year, when the clean energy company's stock was trading at less than a sixth of its current price, adjusted for Tesla's 5-for-1 stock split in August 2020. May 1st, 2020, Tesla at $163 a share is too high, and he was not kidding, said @Elon Musk, Burry tweeted, linking to a Wall Street Journal article about the Tesla CEO's comment. Tesla stock has slumped 16% over the past 2 trading days, erasing nearly $200 billion from its market capitalization. The sell-off followed Musk's launch of a Twitter poll to determine whether he should sell 10% of his Tesla stock. The poll garnered 3.5 million votes, and 58% of the respondents voted for a sale. Burry proposed on Monday that Musk might want to cash out some stock to service his personal debts. He noted the executive had 88 million Tesla shares, or 36% of his total stake, pledged as loan collateral as of June 30th this year. The Scion chief announced he was short Tesla in late 2020, and his fund held bearish put options on the stock as recently as June 30th of this year. However, Burry told CNBC in October he was no longer betting against Musk's company, and the puts represented a trade, not a long-term position. The contrarian investor has taken several shots at Tesla over the past year. He described its stock price as ridiculous in December 2020, when it was below $600, a fraction of its $1,024 close on Tuesday this week. Burry predicted in January this year that Tesla stock would collapse like the mid-2000s housing bubble, and told shareholders to enjoy it while it lasts. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye.